Hey, what's up guys? John here. The FDIC had a public meeting scheduled to discuss all of the new changes coming to the entire banking system in America, but they decided to cancel this meeting and do it in private. They don't want people to know about all the new regulations coming to credit cards, to home loans, to auto loans, to small business loans, refinances, home equity line of credit, you name it. All of this is changing, and they're using the excuse because of Silicon Valley. They're using it because of First Republic, Signature Bank.
SVB, the 16th largest bank in the U.S., is now the biggest American bank to fail since the 2008 financial crisis.
First Republic Bank has become the second largest bank failure in U.S. history.
Meanwhile, Signature Bank marks the third largest bank failure in U.S. history.
PacWest getting acquired by Bank of California.
Reported by the Wall Street Journal, PacWest is merging with Bank of California.
All these problems are the excuse that they're feeding us. They're saying that because of this, we need to really restrict your access to capital. But when you look at what's happening behind the scenes, you look at some of these dates, how everything adds up, you're going to see a completely new America getting rebuilt before our eyes. In this video, I'm going to show you with verifiable facts what the dates are, how this whole thing lines up, and how this is going to impact you and me. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's happening in America. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So, the U.S. FDIC scraps a planned meeting on special assessments for bank failures. Right? The U.S. Federal Deposit Insurance Corporation on Thursday abruptly canceled a planned public meeting at which the board member was due to consider approving the collection of bank fees to recover losses of March's failure, Silicon Valley Bank and Signature Bank. The FDIC's board of directors will still decide on the proposal, but will do so in private, according to the FDIC spokesperson, who declined to comment on the reason for the change. You know the reason. They don't want people to know. They want it done quietly in secret. Now you have to ask yourself, when you scroll down here and you start to look at some of these details, they say that they want a new proposed rule, right, unveiled in May, that roughly $16 billion cost that the U.S. bank failures would be collected in quarterly payments over a 2-year period. So we're in 2023 now, 2025 would be a 2-year period. Coincidentally, this matches up perfectly with Basel III Endgame. You have to ask yourself, well, John, what is Basel III Endgame? Well, I'm going to get to that in a second. And when I do, you're going to be blown away by how this is going to impact us. So when you look at this, for example, Mike Crampo, right? He's a U.S. Senator for Idaho, and he talks about Basel III Endgame. And here's what he is issuing as a warning to the American people, because this is already locked in. Like, this is happening. Ultimately, these large increases in capital have not been shown to be evidently based, as the Federal Reserve, FDIC, or OCC have failed to provide proper analysis or data to justify their merits, particularly around the cost that will impose throughout all sectors of the economy. In fact, we have heard widespread concerns regarding the negative impact of Basel III could have not only on affordable housing, but on mortgage lending, small business lending, consumer lending. In addition, it would limit the availability of access to credit cards and home equity lines of credit. Similarly concerning, the proposal will ultimately put U.S. companies at a competitive disadvantage globally and could force U.S. companies to search for access to financial services from financial institutions abroad, rather than here at home. I mean, so much for the land of opportunity, right? Where people would come from all over the world to come to America to provide a better life for themselves and their family. Now, a lot of these people that moved here for a better life are going to be going back home, right? And a lot of people in America are going to be looking for a new home. You're going to start seeing a lot of change. You're already starting to see it in America. You're already hearing a lot of people leaving, going to different countries. This is going to continue to ramp up. But you're going to start seeing just a lot of companies taking their opportunities outside of America. Moreover, the proposed disproportionately harms companies that are not publicly listed. You would think that, they say that they want to combat inequality. They want to help people. Well, why would they do this if this is, only going to benefit the publicly listed companies? Well, maybe because maybe that's a big accident, or maybe not. Right? Who happen to middle market private entities, and there are millions of small businesses across the country. Each of these potential consequences could have a major ramification alone, but taken in totality, they pose significant harm throughout the economy, particularly in the face of current economic headwinds and tightening credit conditions. So you might be out there maybe trying to get a personal loan, a credit card, a home equity line of credit. You're maybe looking for a line of credit now, and you're realizing, hey, it's getting harder than it was 6 months ago, than it was a year ago. Let me tell you, it's going to be the easiest time to get access to credit today than it ever will be going forward. Because every 6 months, every year from now until then, it's going to get much, much, much harder. They already have this set up. Banks will have approximately 2 years to interpret the new rules, assess their impact, address new data, tech needs, and adjust business strategies. Basel III Endgame represents a sea of change for the U.S. banking industry, significantly altering regulatory capital regime for U.S. banks. The proposal would modify how the largest U.S. banks think about regulatory capital and extend more granular, rigorous requirements to U.S. regional and mid-sized banks. Meeting these requirements and building on them to better understand and manage business and portfolio profitability will require an enterprise-wide effort. The EY organization is here to help you navigate Basel III Endgame. Well, let's look at who is excited for this. It's Morgan Stanley. CEO says his firm's ready for Basel III Endgame, the sweeping new global rules on banking. Well, let's take a hard look at what's really going on in the U.S. economy. Everyday American consumers sitting on $17.239 trillion in debt. I mean, you're probably by the end of the year, we'll probably be at $17.5 trillion in debt, right? $1.6 trillion in student loans, $1.7 trillion in auto loans. You know, you're sitting on almost $1.1 trillion in just credit cards. You're seeing so much debt that's going unpaid right now. Consumers can't afford, inflation continuing to persist at this level. But then you have to ask yourself, what's going on with commercial real estate? Who is exposed? Well, here's where the dominoes, I believe, start to fall, and here's where they can perfectly supply their solution to a problem that they created. So this problem with commercial real estate, it's a big problem. It's a big issue because you're looking at $2.7 trillion worth of commercial debt that has to get refinanced from now until 2027. Now until 2027. So you look at this, $2.7 trillion, that's 1 out of 10 properties throughout America has to get refinanced. How is that going to happen as capital controls continue to get worse and worse and worse? We're going to start to see erosions of property values and a lot of properties nationwide, especially commercial, getting massively repriced. And so regional banks are holding 70% of that debt. So as we start walking into a situation where consumer deposits continue to fall and their defaults continue to pick up, what's ultimately going to happen? Banks are going to be sitting on a lot of losses, and these banks are likely going to start to sell off, and there's going to be a lot of bank consolidation. And so when you have a lot of bank consolidation, the Morgan Stanleys of the world, the Bank of America, the Wells Fargo, these Chase banks, they're going to get bigger, 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 bigger. And the bigger they get, the easier it is for them to bring forward Basel III Endgame and a lot of these new regulations. And so when you start to look at some of these changes, it's very clear what's going to happen. Some of these banks are realizing their once unrealized losses. So they're going to start to realize these losses. This consolidation is going to happen. At least that's the trajectory, unless some big change happens. But at this rate, U.S. consumers are probably not going to be making more money to pay off their debts, and inflation probably isn't going to get any better anytime soon. I mean, Ken Griffin, for example, he came out yesterday saying that inflation is probably going to be a problem for decades to come. So if you look at the situation, real wages are softening. I mean, it's a problem. And the solution they're going to present is Basel III Endgame. And that's why you have to ask yourself, if they were comfortable with the American people knowing some of these big changes coming to the U.S. banking system, why would they want this meeting done in private, right? They wouldn't. They would not. So my advice to anyone out there, entrepreneurs, business owners, just everyday Americans, if you have reservations about the future, now is the time to get rich. Now is the time to make smart decisions. Now is the time to position yourself. You want to position yourself so you can weather the storm, because money equals options and options equals wealth. And if people are going to start relocating outside of America because of tight capital controls, if you're sitting on some money, you're sitting on an online business, you're able to pivot and move, life's going to be easier for you, right? That's the sad reality. I love America. I love America. But at the end of the day, if you can't get access to money here, if it gets a lot harder here, a lot of other people will likely look to move, right? And with it will come a lot of what made America, America. What do you think of this situation? Do you think we're walking into a scenario where we're going to see the commercial real estate crisis, the consumer debt crisis, all these problems continue to ripple through the U.S. economy, we're going to walk into more bank failures, and because of that, we're going to see a big presentation of a new solution to prevent these issues from happening again. Drop below. We'll have a conversation about this. I'm betting that we're going to see some really big changes. Hit the like button, and if you'd like to fix your credit to position yourself for the greatest wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. My suggestion is the more banking relationships you have, the better you're going to be. Because as banks start tightening up, some might be a little bit more lenient than others, and some, might be a lot tighter than others. So the more options you have, the better off you're going to be. So if you need help fixing your credit to open the doors for more banking relationships, a great credit score will definitely help you do that. We'd love to help at GreatCreditFast.com, and I'll catch you in the next video.